Hi everyone, welcome you once again to Micro Learning. This is Shailaja with Standard 12 Economics, lesson number 1, Introduction to Macroeconomics. So previously we have seen about capitalism, socialism, mixedism. I hope you would have understood, you have gone through everything and you would have learned the concept in it. So in today's class we are going to see an important chapter, important concept which is called as circular flow of income. What do you mean by circular flow of income? Income should be flowing in the economy. Different sectors, they contribute towards the economy. So that in return again income flows towards the economy. So from the economy towards the people and from the people towards the economy, the money keeps on flowing. This is what we call it as circular flow of income. Now here you're going to see circular flow of income is a model of economy showing connection between different sectors of the economy. So first you should know what are the different sectors. We have agriculture sector, industrial sector, and the service, or we call it as a tertiary sector. Now, how does the income flow? When income flows, naturally goods and services are purchased. When goods and services are purchased, production increases. When production increases, we utilize the factors of production to the greatest extent. And these factors of production is being distributed by firms towards a household and government and nation. So this is how the circular flow of income keeps on moving. Now we are going to see two important concepts. One is stock and the other is flow. I hope you'll be knowing what is stock. Stock refers to the quantity of commodity. Okay, what does stock represents, or what do you mean by stock? It is a quantity of commodity. Okay, during a particular time we hold a stock. For example, after every 3 years or every 3 months we can take it, not 3 years, 3 months we can take it. Every 3 months in a firm, they see what is the stock that is available, what is the demand that is in the market. So according to the demand for a particular commodity, the stock is being released into the market when the demand arises. So always a firm or an industry must have a stock of the goods. When a demand rises in the market, the goods has to be brought into the market. So stock refers to quantity of a commodity at a point of time. At the same time, what does flow represents? Flow represents period of time. So whenever it is required, whenever the goods and services are required, it is brought into the market during the particular point of time. So what is happening to the goods? It has been flowed into the market. Income also flows into the market. So here we are seeing stock examples are given here. What are the stock examples given? Money supply, unemployment, foreign exchange reserve, capital. All these are supposed to be stock variables. What is flow variables? National income of the country, how much of import and export is there, what is the level of consumption, what is the level of production, what is the level of investment. When all this is being done, what happens? The income flows into the economy. So this is the difference between stock and flow. Now what is economic model? In an economy actually is organized in an incredible complex ways. So we do not know what actually human is going to do next. So according to that, what happens here is, model is just, it's a descriptive activity of a behavior, because we do not know when consumer changes his mind, how does he going to behave, what is going to be the market condition. According to that, he may behave differently as such. We do not know what is the demand or what is the supply that is going to be. Okay, because human keeps on thinking in a different way, and he thinks about what has to be done next. So what is an economic model? An economic model is just a description about what are the activities and what is going to be their behavior. So here economic model are built on mathematics, graph and equations. Okay. So the commonly used economic models here are supposed to be demand and supply model, circular flow model and Smith model. So once again I say, economic model is nothing but, it is not an organized one. It is a complex way. In the real world, we do not know what human thinks about. What is he going to do next as such? Okay, so every time there is being changes that is taking place. So economic model is nothing but, it's about demand and supply of a particular commodity, how the income is going to flow within the economy. Okay, with that we can represent, with this can be represented in a graphical way, in an equation way, it can be mathematically also represented. This we call it as economic model. Next concept we are going to see is firm. Firm, industry. Two different concepts here. A part of an industry is called as a firm. A firm is a commercial enterprise. And what is the work of a firm? To generate revenue. How do they generate revenue? By selling goods and services. So firms hire factors of production like land, labor, capital and organization. These are supposed to be the 4 factors of production. These are owned by the households. So firms will sell the output to households. Okay, so land, labor, capital and organization is being supplied by the household. What does the firm do in return? The firm returns goods and services. Now what is a household sector? Okay, this household sector is completely engaged on consumption of goods and services. What does a household do? He spends his entire income for the payment of goods and service. Not only goods and service, he is making a payment of tax to the government. This is what a household sector does. So here, who is a household? He is supposed to be a sole buyer of goods and service. He is a sole supplier of factors of production. He spends his entire income on the purchase of goods and services. And what does he do? He supplies factors of production to the households, and in return he is receiving income as such. So a household, the main work of a household is supposed to be utilizing his income for consumption of goods and services. After the consumption of goods and services, a part of a payment he is paying it in the form of tax towards the government. This is the work of a household. Now I am going to show you a diagram for you to make you understand. One side we have household, the other side we have the firm. What does a household do? Household supplies the factors of production. Factors of production. What does the firm in return do to the household? The firm supplies goods and service. See how it is interconnected with each other. From the household, again I will show you. One side we have the household. The other side we have the firm. What does a household do? It supplies factors of production. What are the factors of production? Land, labor, capital, and organization. Firm, what does it do towards a household? It gives away goods and services. I hope you have understood. Next one. Now, there are three models in the circular flow of income. The first one is two-sector model, three-sector model, and four-sector model. So, what are the models in the circular flow? We have two-sector, three-sector, and four-sector. Now, the first one we are going to see is two-sector model. Two-sector model has one side household, the other side is the firm. What does the household do? Household is supplying consumer expenditure towards it. That is, we call it as factors of production. Or put it in another way, you have household supplying factors of production towards the firm. What does the firm does? It supplies goods and services. Now, since we are supplying factors of production, we are getting reward for that. What is the reward that we are getting? Wages, rent, and dividends. Okay. In return, now what is happening from the household? You can see consumer expenditure. Okay, what does the consumer do? He spends money for his consumption. So he purchases goods and services. So this we call it as two-sector circular flow model. Now under two-sector model, the descriptive part of it is two sectors are involved in production. Okay, which are the two sectors? It is household and firms. Outer circle represents the real flow and the inner circle represents the monetary flow. Now the real flow indicates factor service. That is the flow from household sector towards the firms. So goods and services, they flow from the business sector towards the household. That is what previously I showed you in the diagram. So we have an equation which is called as y is equal to c plus I. Now we can see three-sector model. Under three-sector model, you can see household. You can see three circles here. In the circle on your left hand side, you can see household. In the center, you have government. And on your right, you can see another circle where firms are written. Now, if you notice carefully, see, this is a three-sector model. There is only a slight difference between the three-sector model and the four-sector model. Okay. In the three-sector model, you do not have a circle over here, which is rest of the world will be written in the four-sector model. So, under the three-sector model, we have only household, government and firms. Now, from the household, what happens? The household pays tax. What does the government do? The government purchases towards it. So you can see the three-sector model: household, government, firms. So what does a household send? Household purchase goods and services. What does the firm does? Firms gives wages, dividend, profit and rent for the four factors of production. Now what does a household do? Household pay tax towards the government. And what is the government in returns does? It does social transfers. That is doing something useful towards the society as such. Now here from the government, you can see government purchases takes place. From where does the government purchase? From where does the government purchase? The government purchases from the firms. In return, what does the firm does? The firm pays tax towards the government. So the easy way to remember this as such, if you see, you have tax this side plus you have tax this side. Okay, then you have social transfer and opposite side you have government purchase. The easy way to remember. So in the center, okay, in the center we are supposed to have household, government and firms. So here we have from the household, you can see it is going towards the firms. Here from the firms it is going towards the household. And after that what happens? We can see that the households have to pay tax. So here firms pay tax to the government, people pay tax towards the government. So from the government, what is the service done to the household? It is supposed to be social transfer. What is done from the government towards the firm? It is government purchase. Now can you see this side demand is given? Demand is nothing but demand for household is demanding for goods and services. Okay, and since it is supplying factors of production, it is demanding for goods and services. So here you can see income. Who is receiving income? The households are receiving income for the usage of the factors of production. So this is supposed to be a 3-sector model. Next one, a descriptive about the 3-sector model. So other than household and firms, government sector is added. So 2-sector we saw household and firms. Now we are saying we have added the government sector and made it into 3-sector model. Government levies taxes to household and firms. What does the government do? It levies taxes. To whom they levy tax? On household as well as firms. So what does the government does? Government purchases goods and services from the firm, and return it receives factors of production from household sector. So who is supplying the factors of production? It is the household. What is the government's work there? Government purchases goods and services from the firm. So government plays a firm role in the purchase of goods and services. So there's an equation, Y is equal to C plus I plus G. So can you recall in 2-sector economy what was the equation written? Y is equal to C plus I. So in the 3-sector we have added Y is equal to C plus I plus G. So 2-sector we saw Y is equal to C plus I, 2-sector. Now you can see in 3-sector we have added G towards it, saying that it is because it is a 3-sector model. Next we are seeing the 4-sector model. 3-sector and 4-sector model is only one difference. Can you see rest of the world? You have import as well as export over here. All the others are supposed to be the same type of flow. Only rest of the world is the addition towards the 4-sector model, because we have to include exports and imports of our country. So this is actually added in the 4-sector economy. But the other things are supposed to be the same. So what is a 4-sector economy does? 4-sector economy is composed of household, it has firms, it has government and external sector. External sector is nothing but the rest of the world. So we have import and export. So what is the equation given here? Y is equal to C plus I plus G plus X minus M. So can you guess what is the 2-sector economy that we have seen? 2-sector economy equation, Y is equal to C plus I. Okay, 3-sector, Y is equal to C plus I plus G. So under the 4-sector, we have Y is equal to C plus I plus G plus x minus m. X stands for export, m stands for import. So you have a worksheet. What is the circular flow of income? Draw and explain two-sector flow model. Equate the formula for three-sector model. Draw the four-sector model. Name the models of circular flow of income. And those who are watching the channel, please subscribe and support me. For further notification, please subscribe